Time now for futures in focus. Oil holding above $46 a barrel, while gold is climbing for a second day as data cloud the rate outlook. And meanwhile, the dollar fairly steady. Joining us now with more from the CME is Joe Cusick, head of the Cusick Group. Great to have you, Joe. I want to start with the dollar. Worst week since May for the Bloomberg Dollar Index last week. But if we look at the relative strength index today, looking a little oversold. Is it time to buy that dip?
I watched the 95 level. That's the pivot point that we're watching. And if it can hold there, I think, yeah, you could start to see that the dollar's going to start challenging 96 and some change at that level. But again, I want to see a little bit more of a test of this 95 pivot. That's what we saw back in September of 2016. That's a critical level.
Yeah, 95.092 on the dollar index right now. And speaking of that weaker dollar, how it's been feeding into commodities, do you think that's partly what's been giving oil the upward momentum as well?
Yeah, definitely. I think the weaker dollar has really helped the commodity space and specifically oil. Also, overnight, you saw that the Chinese data came out a little bit better than expected. You saw GDP. You're also seeing that steel production a little bit higher. Expectation of potentially a healthier economy than what people were anticipating in China. But that dollar really has given a boost to oil, and it's been able to hold that 45. I still think the sweet spot in oil is going to be that $45 to $44 level. I still think that could be potentially tested just because we have so many rig counts that have increased. We had 2 more online last week here in the States. Brent, though, one thing about Brent that you want to watch the Libyan and Nigerian production numbers. They keep coming out higher than expected. That could put that OPEC production freeze a little bit in jeopardy, so I'm watching that closely, though.